What's going on, guys? My name is Jason. In today's video, I'm going to be talking about a topic that a subscriber of mine actually recommended, even though I might be a little bit late to it. It's probably going to be somewhere in the title or the thumbnail, so I'm just going to do a quick recap. When you look at the NASDAQ, it had a pretty good run up and helped put a lot of money into investors' pockets. But the thing is, the market still seems very divided between tech stocks and recovery stocks, which seems pretty reasonable. I mean, it's not like the virus is just going to get up and delete itself from the world. That just wouldn't make any sense. We've got companies in the recovery sector who have been hit hard. For example, airlines, cruise lines, hotels, restaurants, you name it. Like, look at Royal Caribbean stock. It's still down pretty significantly from where it was at the beginning of this year. On the other hand, though, we've got companies like Wayfair who have benefited from the shutdowns, and their stock has shown that, going from $25 to literally over $250 in the past 6 months. So if you put $100,000 into that stock at the bottom 6 months ago, you'd be a millionaire today. But that probably wouldn't be a good idea now or in the future, because anything could happen. I just like thinking of that sort of stuff. But with Wayfair being a tech stock, most of them are put into the NASDAQ index, which in the past 5 months has ran from $7,200 to over 10.8K. And again, 5 months. We've had companies as big as Microsoft go from $135 at the bottom in March to what it is today at $204. We've also seen big run-ups in stocks like Square, Shopify, Amazon, Wayfair, and of course, all the bears' favorite position, Tesla. But I just want to let all new investors know that these type of gains every year in the market aren't normal, and they probably won't be happening every single year in the market. Some years are better than others, and you'll experience that with time. And if you actually check how much the S&P is up year to date, it's only up a little over 2%, but it's up almost 50% from the bottom this year. And I'm going to tell you, that's probably never going to happen again, or the chances of it happening in a 5 or 6 month period are very slim. When you look at the annual average return of the S&P 500 and the Dow Jones Index, they return 10 and 5.5% respectively since inception. But the Dow Jones has changed and returned a lot more from the 19th century, and you could probably expect that with the new advances to the world. Speaking of centuries, go ahead and hit that like and subscribe button, and the YouTube algorithm will bless you with a century of good luck, I promise. Oh my god. But moving back to what we were talking about before, this pullback. Hopefully it's a pullback. This is something that a lot of investors could see from a mile away. Like, if you've been in this market for a long time, and I'm not saying I have, I've just learned from the experience of other people who have been in the market for longer than I have. And you know that seeing your portfolio go up and up and up every single day kind of does give you bubble vibes. Especially if you have a stock like Tesla, which is down almost 11% just this trading week. And to be down that much and still up over 400% is just flat out insane. But when everything's all nice and dandy in the market and investors just continue to see that their portfolio is going up and up every single day, no one says anything about it. They just say that these stocks have more room to go higher, which they do though. Don't get me wrong, they have more room to run, but long term. I'm talking about long term, they have more room to run. But as soon as things take a little turn, we have people from CNBC making videos like this. Like, come on, no one was saying they were scared or these are uncertain times when their portfolio is going up over $1,000 in a day. This is why I think it's better for people to do their own research on the market, stocks, etc., and then infer instead of listening to people like CNBC. The cast over at CNBC literally just turned bullish on Tesla what seems like a month ago, where before all they had to say was negative things about Tesla, and they just love bringing on Tesla bears where they could just let them spew all of their nonsense continuously, non-stop, without any interruptions. But as soon as someone like Ron Barron came, they just cut him loose as soon as possible. Or another thing that you could do is do your research on YouTube on why the stock market dropped, like how you're watching this video right now. And there are tons of other people on YouTube that have made videos about this specific topic. Like, I know that Graham Stephan has a video on his channel that you could check out on why the stock market's dropping, or he talks about the stock market dropping. But in the end, I think that it's best for investors to do their own research, because in the end, you could find something online that may change your mind and give you a different side of things from another YouTuber that stated their opinion. You might agree with something different than what I told you or someone else told you. But I honestly think that this is just the market correcting itself, which is long overdue. I'm saying that this probably should have happened like a month ago or so, but it's healthy that the market is starting to correct itself and bring itself back to reality. Anyways, that's gonna wrap it up for this video. If you made it this far, thank you so much for watching. Please don't forget to hit that like and subscribe button. It means a lot. Also, don't forget to comment down below your opinion on the market. But with that being said, I'll see you guys in the next one. Peace.
Bye.